Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of fiscal wobbles in both the US and in Europe. Firstly, American consumer prices last month rose at their steepest annual growth rate since 2012, up 2.8% per year, and exactly on analysts' expectations. That reinforces the Federal Reserve's own forecasts. Excluding food and energy, they're up 2.2%. But of course, inflation at this rate is undermining pay increases, so real pay gains have now evaporated. The upshot of both these data sets is that the US Fed will almost certainly raise its policy rate tomorrow by another 25 basis points to 2%. That would take it back to the level we last saw in September 2008, a decade ago. And for the first time ever, will put the US policy rate above the New Zealand OCR. Meanwhile, the US monthly federal budget deficit increased by $147 billion in May. That's $20 billion above what analysts were expecting. Tax receipts were 9.7% lower than the same month a year ago, and spending outlays were 10.7% higher. Fiscal management in the US is deteriorating quickly. Their public debt outstanding has reached $15.4 trillion, not including intergovernmental holdings, and that is up from $14.3 trillion in the same month a year ago, a $1.1 trillion rise in a year, and their fastest deterioration in their history. In China, times are tough in their coal belt. One city there failed to pay its employees' salaries in May due to fast declining tax revenues that are largely based on coal output. In Germany, the mood among investors took a deeper than expected slide in June, weighed down by concerns about the impact of an escalation in the trade dispute with the US and political instability in Italy. And even more unexpected slide was gripping the wider EU investor base generally. This poor outlook comes just a day before the ECB is due to meet and probably signal some sort of tapering plan. In Australia, the Queensland Government Treasury is warning that they may be in for a deficit-threatening downturn from a property market at risk of turning. They have concerns about the oversupply of up to 15,000 apartments in Brisbane's property market, combined with a fall in apartment prices of more than 20% in recent years. Their central concern is that the turn will come as similar turns come in Sydney and Melbourne. And closer to home, Greens Minister Eugenie Sage has approved a Chinese-owned company to purchase land and expand their existing Otakiri Springs water bottling plant near Whakatane. The company will now expand by investing more than $40 million over 4 years to upgrade the plant and establish 2 new bottling lines. All the product will be exported to China in single-use plastic bottles. The US 10-year yield is now at 2.96%. That's 1 basis point higher than yesterday. The Chinese 10-year is at 3.67%. That's down 2 basis points, while the New Zealand equivalent is 3.01%, down 1 basis point. Oil prices are little changed today, with the US price remaining just over $66 a barrel, but the Brent benchmark has fallen by $1 and is now at $75.50 a barrel. Meanwhile, the official estimates in the US of likely future crude production worldwide have been scaled back. In 2019, they see demand unchanged, but supply out of OPEC falling. They also lowered their estimates for US crude production as well. Gold is down $4 to $1,295 an ounce, and the Kiwi dollar will start today marginally softer at 70.1 US cents. On the cross rates, we are holding, however, a bit firmer at 92.5 Aussie cents and 59.7 Euro cents. That leaves the TWI at 73, basically unchanged since yesterday. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.